Hi everyone! In this video lesson, we are going to talk about the level 2 and the time and sales and discuss their importance to us as day traders. Level 2 is essentially the order book of the market or exchange that you are trading. Every stock has its own level 2. In Nasdaq, it is a sorted list of the highest bids versus the lowest offers. The list includes all the market makers and market participants that are willing to trade this particular stock. As we alluded to in an earlier lesson, market makers are the big players who provide liquidity to the market. They essentially make the market by selling their shares and fulfilling buy orders when nobody wants to sell, and filling the sell orders when nobody else wants to buy. If it hadn't been for market makers, there would be no market if buyers and sellers become stubborn at certain price points. This role poses an inherent risk for the market makers because the stock can go further against them after they buy or sell. They are compensated for this risk and they try to mitigate it by profiting through the spread. Other market players are ECNs or electronic communication networks. They are automated computer systems in the Nasdaq that match buyers and sellers to enable them to trade directly without a middleman. Those offer extremely fast execution, but they come for a fee. Now for the ECN routes, there are two possibilities. First case is that you add liquidity by placing your buy order on the bid or placing your sell order at the ask, and then waiting for your order to be filled, which might take some time until a buyer or seller hits your price. In that case, you are adding liquidity to the market and you can actually get credit from the ECN network, which is usually in the order of 0.1 to 0.2 cents per share if your broker allows commission rebate. SpeedTrader and Lightspeed, for example, allow you to trade through ECNs and they propagate the rebate to you if you add liquidity, while unfortunately SureTrader does not. The flip side is the case when you remove liquidity. You just hit the bid if you want to sell your shares or take the offer if you want to buy the stock. This way you get in and out extremely quickly without having to wait for someone to fulfill your order, and that is because now you are the one who fulfills someone else's order. But the downside of removing liquidity is that you pay a fee in the order of 0.3 to 0.4 cents per share, which again depends on the particular ECN. It is worthy to note here that some ECNs are free and do not charge a fee or provide a rebate, but most of the big ones do. If your orders are huge, in the tens of thousands of shares for example, then these fees start to add up and you might be better off adding liquidity if your broker has the rebate system. Some very famous ECNs are ARCA, Nasdaq, BATS and EDGX. Okay, now let's look at the level 2 and examine it. Those are two level 2 quotes from two different platforms. They look a little bit different, but they have the same components. Let's look at the left half of the level 2, which is the bid or the buy side. First column is the MMID or market maker ID or the ECN ID. This is a 4 or 3 letter abbreviation of different market makers that we just discussed. Second column on the left side is the bid prices, sorted in descending order with the highest bid being on top and then gradually decreasing in price as we go down the level 2. Third column is the share size at that particular price. Something to note is that the number is divided by 100. So for example, if you see a bid size of 100, this really means that 10,000 shares are sitting on that bid. Okay, so the right side of the level 2 is the offer side. The first column is the market maker ID, same as the bid side. The second one is the ask price in ascending order, starting with the lowest ask price on top and gradually increasing in price as we go down. The third column is the share size similar to the bid side. As you can see, the bid is sorted in descending price while the ask is sorted in ascending price. The different colors are just a quick representation of all the different market makers at a particular price level. This gives you a very quick feel of the amount of supply or demand and the stacking of the market makers at a certain price point. Now, let's look at the benefits and the risks of watching the level 2. It is obvious that it gives traders a huge insight into the stock's price action and the possible near-term direction. Also, experienced traders can differentiate the institutional buying from the retail traders, like you and me, by looking at the level 2 and identifying the key market makers and the different ECNs, thereby knowing who has interest in the stock. As a trader, you can be ahead of the crowd if you learn to properly read the level 2. So for example, if you see a huge ask size and you are holding a stock, you might want to dump it because this will create a huge supply and then drive the stock price down. And if you are thinking about buying a stock and you see a huge bid size, then this bid size might confirm your decision of getting into that stock because the high demand will probably move the stock price up. Another thing is that you may see what is called thinning of the level 2, signifying weak interest in the stock. Or you might see stacking of market makers at a certain price point, creating what is known as a level of support or resistance. We will discuss this in great detail later in the course. Okay, so all this is great and can really give you an edge, but unfortunately, sometimes depending too much on the level 2 can cause problems. One of them is the fake orders. So what are those exactly? Sometimes if a trader or institution are short a stock, for example, and they want the price to move down in their favor, they place a huge sell order on the ask. This scares traders into selling their shares in fear of a price tank due to the huge supply. It also scares away buyers who were thinking about buying the stock, which further amplifies the drop in price. The trader or institution that placed the order cancels it before it gets executed. This is called spoofing, and although it is illegal, we see it again and again, especially with small cap stocks. Same idea holds on the bid side, which results in falsely driving the price up. Another trick that is often played is the hidden order size. Let's say, for example, an institution wants to sell 500,000 shares of a stock that it holds. If it directly places the order size on the ask, the stock price will tank dramatically due to the fear created by the huge supply. What they do is, they hide their real size and place, for example, 10,000 shares on the ask to lure traders into buying, thinking that it is a breakable supply level. But when those 10,000 shares are bought up, another 10,000 shares appear for the same price, again, then again, then again. This often signifies a hidden huge seller, and when traders recognize it, they sell in fear. Unfortunately, it can be very hard to spot, especially for beginners. Okay, let's now move to something else, which is the time and sales. It is simply a representation of the most recent transactions that took place. A green print means that the offer was taken or a buyer bought those shares by paying the ask price, while a red print means that the seller hit the bid or sold his shares to the highest bidder instead of waiting to be filled on the ask. And a white print means that the transaction occurred somewhere between the bid and the ask in what is known as the dark pools. This gives a visual indication of the price action and whether traders are buying the stock in greed or selling their shares in fear. Combined with the level 2, the time and sales is a very powerful tool to have an insight of the near future price movement. In conclusion, the level 2 and the time and sales can be very useful in completing your thesis about a certain stock, but you should be very cautious and keep an open eye for the manipulation that can occur. And always look at the level 2 in conjunction with the stock chart and the volume to have a complete picture about the stock's price action. This concludes this video about the level 2. Thank you very much and see you next time.